Imagine a world where growth isn't driven by debt, but by real resources, genuine profits, and sustainable practices. In our current debt-driven economy, governments, corporations, and individuals rely heavily on borrowing, creating cycles of debt that contribute to inflation, inequality, and economic instability. But what if there was another way? What if we could shift to an economy where expansion is based on actual assets and resources? Such a change could fundamentally reshape society, impacting everything from wages and job security to inflation and government spending. Let's explore what a future without debt-driven growth might look like. In an ownership-based economy, growth would be directly tied to available resources and profits, rather than relying on borrowed money. This approach offers a more stable foundation for growth compared to the high-risk, high-reward nature of debt-driven expansion. When growth depends on real value, companies and governments would focus on projects that offer long-term, sustainable value. This shift would encourage investment in projects that contribute positively to society, rather than speculative ventures that often lead to market bubbles and crashes. The economy would experience steadier growth, avoiding the volatility that comes with debt cycles. This would reduce the risk of economic crises, making recessions less severe and recovery more manageable, benefiting everyone in society. The labour market would also undergo a transformation. In a debt-free economy, companies would no longer need to cut costs to meet debt obligations, which often leads to downsizing or reliance on temporary and part-time workers. This would create an environment where businesses invest in their workforce, providing stable, long-term employment with career growth opportunities. For workers, this means less job volatility and greater financial security. With companies focusing on growth tied to real profits, workers would benefit from fair wages, benefits, and training programs. An ownership-based system would ensure that compensation is reflective of the real value created by employees, helping to reduce income inequality and creating a more motivated and productive workforce. Debt-driven economies often lead to inflation, as the creation of new money-to-service loans increases the money supply. In contrast, an ownership-based economy would stabilize prices by limiting the money supply. This would control inflation, ensuring that the economy grows at a sustainable rate, allowing consumers to enjoy improved purchasing power and stable prices. In such a system, saving and investing would become more attractive. Without the constant erosion of savings due to inflation, individuals would have the opportunity to build wealth over time. This stability would lead to greater financial independence and long-term security for families and communities, giving people the chance to save and invest without worrying about the value of their money constantly decreasing. Governments, too, would operate differently in an ownership-based economy. Instead of relying on borrowing to fund projects, governments would use tax revenue and reserves to finance public programs. This constraint would encourage governments to be more prudent in their spending decisions, focusing on essential services and avoiding unnecessary projects. With no need to rely on loans, governments would be forced to be more transparent in their spending, ensuring that taxpayer money is spent efficiently. This increased accountability would foster public trust, as citizens would have a clearer understanding of how their money is being used. A shift to an ownership-based model would encourage citizens to take a more active role in shaping public policy and holding the government accountable for its decisions. One of the most significant benefits of an ownership-based economy is its potential to address environmental issues. In a debt-driven world, companies often extract resources at unsustainable rates to generate returns and meet short-term financial goals. This can lead to environmental degradation, as companies focus on rapid growth and profit maximization at the expense of long-term sustainability. In contrast, an ownership-based system would encourage companies to manage resources responsibly, as overexploitation would directly impact the viability of their assets. This focus on sustainable practices would reduce environmental harm and promote better resource management, benefiting ecosystems and communities alike. Without the pressure of debt-fueled growth, companies could shift their focus toward renewable energy sources, helping to mitigate climate change and reduce reliance on fossil fuels. The shift to an ownership-based economy would also empower communities and reduce wealth inequality. In a debt-free system, local businesses and communities would rely on existing resources and savings to fuel growth, promoting economic independence and self-sufficiency. This approach would encourage local investment in sustainable projects that meet the needs of communities, creating jobs and fostering regional stability. The focus on real value would also reduce the concentration of wealth among a small group of investors and corporations. By tying growth to genuine economic contributions rather than financial speculation, an ownership-based economy would help reduce economic inequality, ensuring that more people have access to quality jobs, fair wages, and the opportunity to build wealth. In such an economy, local businesses would thrive, as their growth would be tied to the resources and assets within their communities. This would promote a more equitable distribution of wealth, as businesses would be incentivized to invest in their employees, provide fair compensation, and create opportunities for economic mobility. With a greater emphasis on long-term sustainable growth, individuals would have the chance to build wealth over time, rather than relying on speculative investments that often leave the working class behind. An ownership-based economy offers a path to a more stable, fair, and sustainable future. By eliminating the reliance on debt and focusing on real resources and profits, this model would encourage responsible growth that benefits everyone, from workers to communities to the environment. With steady growth, fair wages, and more equitable wealth distribution, an ownership-based economy could lead to a more prosperous and just society. The transition to this model would not only reduce the negative impacts of debt-driven growth, but it would also create a financial system that values long-term stability over short-term profits, ensuring a better future for all. Let's rethink our approach to growth and build a future that works for everyone.